Good morning, ladies and gentlemen, and welcome to today's morning market. So this is where we discuss the key points following the investment team's morning meeting. So as well as our internal discussions, we always continue to proactively engage with all of our fund managers to understand how they are positioning our funds through this period. As we film this, equity markets have opened up strongly, with the UK and Europe building on the generally strong returns seen within Asia overnight. With the uneasy feeling of the past couple of weeks, there was actually a slightly more orderly feel to markets yesterday, and this is a function of the volume of announcements from central banks that have come through in the past couple of days. And this is to ensure an orderly functioning of the plumbing within financial markets. This was required. There was evidence that the UK and globally that financial conditions had continued to tighten. In the UK, the Monetary Policy Committee cut interest rates further to an historic low of 10 basis points. So that's come from 0.25%. In addition, the MPC introduced further quantitative easing, increasing the Bank of England's holdings of UK government bonds and non-financial investment grade corporate bonds by £200 billion, so we're now at £645 billion. The additional purchases will be financed by the issuance of central banks' reserves. They're expanding the term funding scheme for SME businesses, and that's an important area of the UK economy. To put this activity that we have seen this week in context, we have seen globally more than 30 central banks cut interest rates, with the majority of these cuts being unscheduled. This has been supported by governments across the globe, announcing the initial stages of sizable fiscal support programs to mitigate the sudden stop to economic activity from the virtual shutdowns that we are seeing being implemented. It's important to remember that these actions take time to work through the system, but one thing is we've seen unprecedented actions being taken. We're 2 weeks on from the clasps of the OPEC Plus discussions and the decision by Saudi Arabia to ramp production and offer oil into the market at a discount to the market price. Oil prices have collapsed. At any point in time, this would have been unambiguously positive for the economy, consumers and corporates. Yesterday, oil futures increased significantly, so up 24%, as Trump suggested that the US would get involved in the standoff at an appropriate time. Okay, that's everything from me. Thank you. Stay safe. Enjoy your weekend. I look forward to speaking to you next week. Thank you very much.